Tesla stock is up about 2% today, and here in this video we will go over exactly why that is, all of your Tesla stock breaking news, as well as your breaking news for the broader markets. There's a ton to get into. I don't want to waste your time with an intro here. Hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of the video if you want to come join the best trading community hands down in the entire world. The link is down there for you. Check it out. As always, we are going to start with your Tesla stock news today. Now, not in any particular order of importance. Let's start here. It says Tesla has redesigned its Megapack website. They say, quote, Megapack is changing the way the grid is powered, operating in over 65 countries. Megapack provides critical grid support globally and can support multi-gigawatt-hour projects. Our megafactories in Lathrop, California and Shanghai, China are among the largest industrial battery manufacturing facilities in the world. Together, they have a total manufacturing capacity of 80 gigawatt hours or 20,000 units per year. That's enough energy storage to retire 400 fossil fuel peaker plants each year. And the Tesla Asia X account shared this video of their Megapack factory in Shanghai, which is pretty much brand new. This thing just started operations like 6 months ago. Tesla is sending out a new email in the US telling people that the federal EV credit ends in 3 weeks and urging them to take delivery soon before it expires. They say, quote, inventory vehicles may be available for immediate delivery. Order now to be able to take delivery before the federal tax credit expires. As you know, you just have to put a down payment on a vehicle before September 31st. To qualify for the credit. If it's delivered 2 months later, you're still going to get the $7,500 tax credit. So again, as I've said before in this channel, it could make Q4 an even stronger quarter than most people are expecting. Now, let's be honest, Q4 is organically the strongest quarter for Tesla. The Model Y L just launched in China and it's doing very well. They're selling them as fast as they can produce them. And we have the tax credit that very well could extend deliveries into Q4. I think Wall Street is underpricing the probability of a very strong Q4 as well. It says here, Tesla's new Megapack factory in Houston will be their most capable yet, with an annual production capacity of 50 gigawatt hours, 25% more than their other 2 Megapack factories. Once fully ramped, Tesla's 3 megafactories will produce a combined 130 gigawatt hours of battery energy storage a year, enough to power 50 million homes. That's nearly 4.2x more battery energy storage than Tesla deployed in all of 2024. The Houston facility will be the first to manufacture the all-new Megapack 3 in late 2026. This product will partially source LFP cells from Tesla's brand new LFP manufacturing plant in Nevada, next to Giga Nevada. The Nevada facility will begin production in the coming months, making it the first time Tesla will produce and source LFP cells domestically and from its own operations. This is pretty cool. Tesla has launched a new social media account on Chinese social media platform Weibo to promote its AI technology. The first 2 posts on the official Tesla XAI or Tesla AI Weibo account feature images and a video of its Optimus bots in action. And in the news today, TechCrunch wrote an article that is blatantly incorrect. Just so you guys know, it says here, Tesla revamps the Megapack in attempt to reverse its declining storage business. Like, that's not true. The energy storage division for Tesla accounted for 22% of total gross profit. It is the most profitable division for Tesla and is growing quarter after quarter after quarter. Like, I don't understand how people still don't understand this. US Republican Senator Josh Hawley wants to ban driverless cars and says he'll introduce a bill on it, quote, soon. He says, I think we ought to ban autonomous vehicles. The spread of driverless cars is not safe and would be terrible for working people. 40,000 Americans die each year in car accidents. Self-driving cars have already proven to be safer than human-driven vehicles. A draft text of the bill has already been sent to Hawley. It's called the Autonomous Vehicle Safety Act. The bill, as drafted, would effectively ban driverless cars nationwide by requiring the presence of human safety operators in any autonomous vehicles driven on public roads. Hawley says if AVs become the norm, the Teamsters unions won't exist anymore. The bill has a pretty small chance of moving forward, especially since the Trump administration has already started to work on a framework to make it easier for autonomous vehicles to get approved and operate on public roads. So again, you can see Tesla is up over 2% today. Wall Street is clearly not taking this seriously. Elon Musk did the All-In Summit virtually and had some big things to say about Tesla. Elon says here that FSD V14 will be the biggest upgrade in Tesla software since FSD V12. He says, quote, "Your car is going to feel like it is sentient by the end of the year." If you don't know what sentient is, sentient probably is not a great word to use in the same context of AI, but sentient is basically emotional, right? It can feel things. So yeah, it's going to feel like a real driver. Now, keep in mind, FSD V14, as we know it, is what is currently being operated in the robotaxi network. Okay, so we haven't heard anything bad about the robotaxi. We haven't heard incidents of crashes. We haven't heard anything negative, which I'm under the assumption of if something bad did happen, we would know about it pretty much instantly. The media would blow it up. Okay. So it is, much better than anything we have now. And it's kind of what we're going to get with V14. It's going to be next level. Elon also says that Tesla's AI5 chip will be up to 40x better than AI4 in some metrics, and 8x better in raw compute, and 9x more memory. He says, quote, "I am confident that the AI4 chips currently in cars will be able to achieve self-driving safely at least 2 to 3x that of a human. Maybe 10x. Elon Musk also says that Tesla's Optimus robot project is the hardest ever in the company's history. And one reason why Tesla stock may be moving higher today, Elon Musk in a new interview on his time in Washington, D.C. says, quote, "I haven't been to D.C. since May. The government is basically unfixable." So it doesn't look like Elon has any endeavors or pursuits to follow in politics, which was something that was a big drag on Tesla stock that does not seem to be coming back around anytime soon, which is positive as hell for you as an investor in Tesla. Now, it also looks like Tesla is doing some robotaxi validation testing in Tempe, Arizona, in preparation for future service introduction. So we've seen the robotaxi operating in many different cities and states in America. The question is, when do they launch in these cities? So there's validation testing going on in Tempe, Arizona, different suburbs or outskirts of Austin that we've heard about, in Vegas, Florida, okay, maybe New York soon, a lot of different areas. What I'm betting on, and the reason I'm so bullish on Tesla into the end of this year, is that we are going to get more cities that launch the robotaxi. Okay. And Wall Street is not looking at Tesla as an AI company. I do believe there has been a pivotal shift with Elon's compensation package. Almost none of it has anything to do with vehicles, right? Just in general. There's only one performance tier that has anything to do with car sales, and that is Tesla delivering 20 million vehicles. Besides that, the rest of the package or the compensation is all to do with AI, right? With robotaxi, Optimus, AI projects, and profitability targets that Tesla will only ever hit with AI, right? So I think from that perspective, you've started to shift the way that Wall Street is looking at Tesla. And I do believe as rates come down, as the economy hopefully strengthens, consumer strengthens, inflation comes down, stimulative incentives in the big beautiful bill start to, work their wonders in the economy, I think you're going to get a much greater focus on Tesla's AI prospects. And that's where the valuation gets unlocked for Tesla. And that's why I think you will see a substantial rally into the end of this year. You can also see Tesla stock from a technical basis wants to move higher. You've been in this upwards channel, grinding higher for a while now. Really, I think it's a question of when, not if, we break out above that 367 level. And then how high do we go above that? Do we go into the 400s? That would look almost certain. How high into the 400s do we go? Could we get to 500 before the end of this year? Also in big news today, Tesla's new Model Y L is sold out for October in China, with new orders showing an estimated delivery date of November 2025 at the earliest. So solid demand in China. This could be another reason why Tesla stock is moving higher today. Now, in big news today, Oracle stock jumped 40% today on earnings. They are on pace for the best day since 1992. Now, the company said it has $455 billion in remaining performance obligations, up 359% from a year earlier. Company's almost at $1 trillion valuation, by the way. But they basically said that over the next 4 years, they have like $144 billion in cloud infrastructure revenue, or they will have $144 billion in cloud infrastructure revenue. They were not even projected anything close to that. Like, not even close to that. It says Oracle now sees $18 billion in cloud infrastructure revenue in fiscal 2026, with the company calling for the annual sum to reach $32 billion, $73 billion, $114 billion, and $144 billion over the subsequent 4 years. It says analysts were, quote, left blown away and in shock. D.A. Davison's Gil Luria called it absolutely staggering on CNBC's Fast Money. Wells Fargo's analyst said it was a monumentous confirmation of the AI trade. Analyst at Deutsche Bank called Oracle's results truly awesome in a Wednesday note. It says here, in our 20 years covering Oracle, and for that matter, the entire software industry, there are very few quarterly results that match F1Q, both in terms of magnitude and revision and clarity of the moment. Bank of America analysts said Oracle's exceptional backlog cements its place as a key AI enabler. Like, this did a lot for the AI trade today. It said AI is here to stay. Anyone that doubted the AI trade before is going to have a very hard time doubting it today. Now, it's interesting because really over the past 2 or 3 days now, a lot of AI stocks, some of which we've covered again or mentioned here on this channel as well, have been going gangbusters. Maybe someone knew about this Oracle report. Today is another good day for some of your AI stocks, and Oracle is likely the reason for that. We look at the broader indexes today. The Dow Jones Industrial Average down 0.66%. S&P 500 is up 0.32%. NASDAQ up 0.2%. Russell 2000 down 0.08%. And the VIX is up 0.27%. But again, we are getting close to halfway through September, and some of the negative seasonals just really are not having much of an impact on markets. I think it's keeping a bit of a lid on stocks. For an example, if Oracle reported earnings maybe even in August or July or a normal month or maybe in October, like the NASDAQ would probably be up like 2% today, right? It's not. You're keeping a bit of a lid on markets because of seasonals, in my opinion. 10-year Treasury yields today are down about 3 basis points. So you're down to 4.045%. That means mortgage rates are falling again. Credit rates in general, whether it's cars or personal loans, also falling. So that helps the economy. Oil is up 2.22% today. Gold is down slightly. Bitcoin up 2.16%. Ethereum up 2%. Solana up 3%. And smaller coins like Doge and XRP up about 1%. Now, we did have some really good news today in terms of PPI. So PPI month over month for the headline came in at negative 0.1%. The expectation was up 0.3%. So we were expecting very much a positive reading for PPI, a quite high reading for PPI. We came in negative. That's crazy. Core PPI month over month, get this, came in negative 0.1%. The expectation was up 0.3%. Now, PPI feeds a lot into PCE. That is the Fed's preferred measure of inflation. So this is a big win for the inflation bears, right? Or people that don't want to see inflation, right? This is a strong step in that direction. PPI year over year, core, was expected, get this, at 3.5%. Last month, it was at 3.4%. So you were expecting a rise on core PPI year over year. You came in at 2.8%, 0.7% lower than expected. This is important because tomorrow we get the CPI report. Well, PPI, in theory, would go up first, and then CPI would go up because PPI, producer price index, or producer price inflation. Usually, if consumers are going to get inflation, typically the companies or the producers are going to raise prices and pass those prices on to consumers. So normally, like PPI would lead CPI. If PPI is leading CPI, we could get a really good CPI report coming tomorrow morning. Now, Wall Street is not jumping to that conclusion today, okay? There is a little bit of nervousness. You can see with the VIX now up about 0.5%. People are in wait and see mode heading into CPI tomorrow. And even though we got a really good PPI report today, it doesn't guarantee that we get a really good CPI report tomorrow, but it's a solid indication that we probably have nothing to worry about coming tomorrow morning. Core month over month is expected at 0.3% tomorrow. Core CPI, that is, unchanged from last month. Core year over year is expected at 3.1%, unchanged from last month. The headline inflation month over month is expected at 0.3%, a little bit higher than last month, 0.2%. And headline inflation year over year is expected at 2.9%. Last month, it was 2.7%. So we're really not expecting much of a change on a month over month basis from last month. But with the PPI report today, and as I've said on this channel already this week, I was already leaning towards maybe we get a lower than expected CPI report. And following today's PPI report, that looks even more likely. Initial jobless claims will be coming out tomorrow as well, expecting about 235,000 for the week. Last week was 237,000. This is a data point that a lot of Wall Street is going to start paying even more attention to. Since, we're getting some mixed reports on the economy recently, and specifically on the labor market. Trump on the NATO drone incident says, quote, "Here we go. After NATO jets shot down Russian drones over Poland, Trump reacted with a brief post. Quote, what's with Russia violating Poland's airspace with drones? Here we go. European leaders called it a dangerous escalation, the first direct NATO engagement with Russian hardware. Officials say Trump's vague response rattled allies, stressing U.S. leadership is key. Trump has asked the appeals court today to let him oust Fed Governor Lisa Cook after, again, the courts shot it down. And the EU is unlikely to hike tariffs on India and China at Trump's request, according to EU sources. The bank raises 2025 year-end target for S&P 500 index to 7,000 versus their prior forecast of 6,550. So Deutsche Bank is expecting quite a rally into the end of this year. U.S. State Department Rubio and the South Korean foreign minister discussed promoting a fair and reciprocal trade partnership. Deutsche Bank, alongside raising their price target to 7,000, they say, and they are citing, stronger earnings, resilient growth, and manageable tariff impacts. EPS forecast at $277 for 2025, up from $267, and $315 for 2026. Q2 earnings rose 10%, and Q3 growth trackers remain above trend. They say equity positioning and buybacks support another 8% upside this year. The bank expects valuations to stay elevated, supported by higher payout ratios and earnings resilience. And Moran's nomination for Fed governor cleared the Senate panel vote today. Russia's foreign minister says they are ready to join possible consultations between the Russian Defense Ministry and Poland. And Donald Trump slammed Powell today after a softer PPI report. It says Donald Trump attacked Fed Chair Jerome Powell on social media after August producer price index unexpectedly fell negative 0.1% versus a forecasted up 0.3%. Trump says, quote, just out, no inflation, too late, must lower the rate, big, right now. Powell is a total disaster, Trump wrote. The drop was driven by weaker services prices, while goods edged higher. Year-over-year PPI eased to 2.6% from 3.1%. Now, the odds today of a larger rate cut in September via the PPI report did not really change. You're sitting at a 94.1% chance of a 25 basis point cut and a 5.9% chance of a 50 basis point cut. But the odds are going to move a lot for October and September. So the odds of another cut October 29th went from 72.9% yesterday to 80.1% today. The probability of at least 3 cuts by October 29th went from 3.5% to 4.9%. And the odds of only 1 cut over the next 2 Fed meetings dropped from 23.5% to 14.9%. The odds of a third rate cut, so a rate cut September, October, and December, went up today from 58.6% yesterday to 67.7% today. So with even the CPI report you get tomorrow, like, we're going to get a rate cut in September. Like, without a doubt. Okay, that's going to happen. The data tomorrow and really over the next month is going to move the odds for October and December. So the question really, I think, will become not are we going to get a rate cut next week? That's a certainty. But are we going to get 2 or 3 cuts this year? Like, if the data supports cutting twice, that's what the Fed's going to do. If the data supports cutting 3 times, that's what the Fed is going to do. And in the meantime, as I've said before on this channel many times now, you really want rate cuts for the right reason. Like, I would much rather take 1 rate cut this year over 3 if that 1 rate cut comes with a strong economy, right? If we get 3 rate cuts, but the economy looks like shit, you don't want that. That's not going to be good for stocks. Okay, now stocks continue to move higher, hitting a new all-time high today on the S&P. I think it's multi-factored, but again, I think seasonals are really keeping a lid on this market. I think if it wasn't for September being such a bad month, the bias to sell stocks, the algorithms that are programmed to sell stocks, you would likely see the markets having much better days here because we just went through one of the best earnings seasons we've ever seen. The economy looks like it's holding up. The Fed is about to cut rates. AI is literally on fire. Like, even following Oracle's report today, like, the market should be up a lot more than what they are. And once we get out of September, I think there's a green light to see a very strong rally October, November, and December heading into 2026, which I think is going to be a huge year for markets. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.